Okay, good afternoon. So, first things first is our lesson objectives. Okay, what do we want to achieve today? Okay, the first thing is, what do we always do every day? Our fundamentals. Okay, we'll go through yesterday in a second. Second thing we're going to do today is, okay, we're going to go through those price action setups again. But more importantly, what I'm going to do today actually is I'm going to show you two types of price action setups. Okay, I'm going to show you the price action on a ladder. Okay. The third thing we're going to do is we're going to go through the ECB quickly. Okay. And then the fourth thing, we're just going to have a look at tomorrow. Okay. Nice and quick, nice and easy, nothing too difficult. Okay, so step one, what did we do yesterday? What was yesterday, the crux of yesterday about? Darren?
Conference, price action, inflation points, tomorrow's plan.
Okay, good. I'm glad you wrote it down. Okay, so let's go over yesterday. Okay, yesterday, very important, guys, please. I can't stress how important what I went through with you yesterday is. Okay, if I was to summarize what trading is all about, okay, it's all about a principle, okay, or a concept, or an idea. Okay, so that's the step one. That's the Dan coming in the morning and saying, there's a VPOC here, there's support here, there's resistance here, this is a key level, that's a key level. Okay, that is step one. Right, that's half the job done. The other half of the job is, how do I execute my trade idea? How do I actually make money out of this concept or principle or idea? Okay, and that is in the execution. Okay, and that's effectively what I dealt with you yesterday, is execution. Okay, so what I'm going to show you today is two principles. I'm going to show you one, which is a gap. Okay, you all know the gap trade. You've all read it in the profile book. You all see it day after day. We've had Spoo's gaps, about 10 of them in the last month. Okay, you all know how a gap trades. Okay, it comes down to it. If it cannot fill it, it should aggressively go with the trend. If it fills it and continues in that direction, it shows weakness. We all know that principle. Okay, but how do we execute? How do we actually make money out of it? Okay, and the other one I'm going to show you is when you have an auction process. Okay, a lot of you would have heard me talk about auction process. Okay, an auction process is simple. When it's relatively expensive or there's good value, sellers enter and everyone sells together. Equally, when it's relatively cheap, everyone buys together. Okay, good. So let's quickly go over the price action signals from here. Or let's go to the fundamentals quickly. Anything in the overnight's worth mentioning? Okay, good. So China PMI, again, another downbeat number. Okay, anything else?
Republicans took control of the Senate.
Okay, good. So as expected, Republicans have got control of the Senate. Okay, yes, the equities seem to like that idea. Okay, Republicans are known to be a little bit more business friendly. So that's the take on it. Use it, lose it. Okay, make what you want of it. Okay, but just know that there was an impact on it. Anything else?
There was a Kuroda speech as well.
Sorry?
Kuroda was speaking.
Good. Okay, so what did Kuroda say?
Yeah.
Okay, good. Very important, tomorrow morning we have the Bank of Japan minutes out. Okay, remember it was a relatively close call, the push through of more quantitative easing. Okay, so I actually might be in here tomorrow morning at 5 o'clock. Okay, because if it comes out, it prevails that actually by increasing the base, they could take it away potentially very quickly. Okay, you never know. That could be the catalyst for finally getting a bounce in the yen. Okay, you may come in tomorrow and the yen's bounced 100 ticks because everyone is caught short the market. Short the yen, long the dollar. Okay, good. Anything else? Anyone else want to add anything onto that? Okay, nothing else major. Good. So, our price action setup. Let's get straight to it. Okay, first one's first. Okay, what I want to do is I want you all to visualize. I want you to close your eyes. Okay, well, in fact, don't close your eyes just yet. Okay, I spoke to you about this trade setup yesterday. What did we call it? In fact, let's list our 5 trade setups, our price action setups from yesterday. First one.
That's the V reversal on 100%.
Okay, good. So we got the V reversal, or just the reversal. Okay, the second one. Come on, guys, we spoke about it yesterday. You should all have it in front of you. Okay, good. Absorption.
Icebergs.
Good. Icebergs.
Pulling
Good. Bit over.
over.
Okay, so pulling of offers and bids. Okay, so we spoke about those 5 things. Now, very important. How many of you identified one of these 5 things today? Okay, Z, what did you identify? Okay, did you make money out of it? Okay, how did you make money out of it?
Because I told you. That's for the first one.
Okay. Good.
And then we quickly,
What market?
FTSE,
Good.
quickly set up the stop loss, just one above the actual price.
Okay, cool. So what was he doing?
There's no point, sorry.
What was he doing? Explain it to us.
Sorry, it obviously had an offer.
Cool.
It was up, say, about 40 or something
Yep.
like that. Then that disappeared. There's nothing, just keep on trading.
Cool.
Nothing's happening.
Cool. And did you nick a tick out of it?
Few actually.
Brilliant. Okay. So how did you hit him and then hit below, or did you
I went-
hit bid offer, bid offer, bid offer, bid offer?
Yeah, I waited to see, and then I just hit the market there.
Brilliant.
Instantly, and
Okay. Brilliant. Simple. Okay. Simple price action. Who else saw some price action today? Yeah. What did you see?
Absorption of the smooth.
Good. Okay. Whereabouts?
After it broke the high
Okay.
on the cash open,
Okay.
it just flips up, comes back inside. Absorption. It's fake. It went through it, and like you get a bearish 1 minute candle, and that's like your signal to like
Okay.
you're short.
Good. Brilliant. Okay. Remember we spoke yesterday and we said absorption can be a tricky one. Okay. You want to tend to use absorption in the direction of the trend. In other words, through the extreme points. Okay. Because that's when you want to see someone panicking out. That's when you'll get the flush. Okay. But equally, if you're going to take it against the trend or in the opposite direction, wait for it to take out a key technical point and then go with the flow. Okay. Go with the direction of the guy who's just won the absorption battle. Okay. Anyone else see any other price action today? Okay. Pulling in the spoos. Whereabouts? Okay. Could you identify a way to make money out of it?
Yeah, I was getting bids and the offers doing scalps in between.
Okay.
And then I would get the bid,
Brilliant.
just fell.
Okay. Brilliant. Yeah, Alessandro?
Bit over in the oil.
Okay, yes, very much so in the oil this afternoon.
Yeah, it's really difficult actually.
Okay.
Because usually comes out a big order.
Yeah.
And you have to hit the market as fast as possible.
Yeah.
And then it goes up. And sometimes there are two cases. The first case is just flash and come back.
Yeah.
And so you have just to have the offer or
Yeah.
whatever.
Yeah.
So they take profit. And the second type is the best one because it's lower and just continue to follow the price.
Okay, brilliant,
So you have the time until that disappear. You can
brilliant,
stay in the order.
brilliant. Okay, for some of you might have heard me getting very excited in the pound this afternoon. Okay, there was a trap pound position. I could see he was trapped, but he was doing a bit over. So he would take the market bid, and then what would happen is we would try and go offer. Someone would sell it to him, but he would just take it. He would take whatever he can get, and he would take and he'll take and he'll take until someone stops selling, and then he goes to market again. And then he stops, and then someone gives to him, and he'll take and he'll take and he'll take, and then he'll go to market again. So he'll take the market bid over the whole time. Okay, so he'll take as much as he can get out of the market, but when it stops giving it to him, he's going to go to market. Okay, and get whatever else he needs. That's a bid over type price action. Okay, when you see that, there was somewhere else we saw that today. Okay, but when you see that kind of price action, okay, bid over price action is very aggressive. Okay, that's the kind of one you want to go with, not go against. Okay, good. Anyone else? Okay, very important, guys. What I want you to do every single day is write these down. Have a list of these things. Okay, go back today in your trade setups and go look, where did you identify these? Okay, more importantly, if you identified it, please make sure you record it. Go and watch it. Okay, because if you learn to identify what V reversal or what absorption or what bid over looks like, the minute you start seeing it and you become a professional at trading that kind of price action, guys, you can make so much easy money. Okay. More importantly, what you're not going to do is, let's say you have an idea that you want to be long this product because there's a support here and all that. Suddenly it goes offer over. Okay. You're not going to stand in the way because you know that's a very aggressive piece of price action. Okay. Just learning these 5 pieces of price action, okay, you're going to increase your consistency 100-fold. Okay. So I'm going to show you a little example of a V reversal. Okay. So how it works is very simple. When we get to an inference point, okay, remember I said to you, a V reversal is when the entire market, so the majority, everyone who's long, okay, takes profit, and anyone who wants to be short enters the market. That's why a V reversal does a reversal pattern. Okay, the whole market flips together, not just some people taking profit. Everyone got that? Okay. Where you typically find this is a Bund example, okay. I tend to do it mostly on yield levels, but I also tend to do it on very big resistance levels, okay. That is effectively, those 53s, you want to shut the lights off, okay. Those 53s is effectively where I deem the level to be, in other words, the crucial level. So let's just watch this very briefly, okay. And what I want you to do is, I'm just going to fast forward this a little bit. Okay, I want you to watch the price action going into the level. That's the important thing. Okay, try and identify. I'm going to watch your channel. I'll push space bar. and I'll try and commentate you through it, okay, so you can have a look. Okay, it's 3-4 minutes long, but watch the price action going into the highs. Okay. More importantly, the V reversal is all about the price action coming off of the level. You'll see very direct, very obvious.
Is that in real time?
It's a little bit slower than real time. Let me put it up a little bit quickly. Okay, I'm going to put it 2 times the speed. Sometimes this is a bit faster. Okay, let's watch this. I don't think I can go any bigger. Very briefly, okay, do you see how the bid changed there suddenly? Okay, so he posted his 5s, someone lifted the 6s, he's gone straight to 7s. Okay, keep watching. Straight to 8s. Okay, not getting 8s, no one's selling 8s, nothing's going through, and a reloaded 8, going to 9s, taking the market. Okay, reloading 8, taking 9, taking 00. Okay, now watch the reaction coming off here. Okay, so bang. Straight away we got 1,000 lot of 2s, pulls it away. Now watch the reaction. Okay, so we got a reloaded 2s and a sell. Reloaded 1s, sell at 50. Okay, so 50 is a trade, 50 is a trade, 50 is a trade, 51's a trade. Okay, what's happening to the 1s? Reloading. Okay, reloading and offer. And offer. Okay, so someone's still sitting there trying to buy it. Someone's still buying it, someone's still buying, but what's happening to the offer?
Is that actually right?
It is actually. Okay, keep watching, guys. Okay, what are we seeing at 49s and 50s? You guys still watching?
Yes.
Okay, so again, what's happened to the offer now? Okay, so we were very aggressive going up into it. Okay, all the activity happens, and suddenly, instantly, has the market ever gone bid more than 2 ticks? Okay, no. And what's happening? So he's taking the offer, taking the offer, taking the offer, absorbing the offer, bless you, absorbing the offer, and going to market. Okay, holding the offer. Okay, look at that again. Bang, reload the 4s, straight to 3, straight to market. Desperate to get in the short, or at least desperate to get out of his long. Okay, look at the 5s, look at the reload. Someone buys 100 at 5, and he just says, thank you, I'll take it all. Okay, again, 55, reload the 5s, and offer at market, 600 trade. Okay, keep watching it, almost done. Okay, what do you note about this? If you're a short, what would you notice about this?
That big order.
Okay, not just a big order, but how quick has this come off?
Yeah, very quick.
Okay, that's the important thing about this trade setup, guys, is that when you get rejection points or auction theory, okay, it comes off very, very quickly. You don't have to, you don't stress about getting paid. Okay, it's almost done, what, 10 ticks in a straight line off the high without a single 2-tick rotation up. Okay, eventually this comes down and it gets all the way to 36s and continues on lower. Okay, so switch those lights on. Okay, let's pause this. Okay, so very, very quickly, this is the hard part now. What I want you to do is I want you to write down, okay, what are the characteristics that you can identify of a V reversal? Okay, so what do you identify by going up? Okay, it looks a lot like what I told you about a climatic move. So you tend to get a climatic move into a V reversal. That's the first step. Okay, the second step is the reversal is very direct. Okay, it's very obvious. Okay, if you were to have sold the climatic move, you never go off sides. Okay, you'll see I never went off sides in that trade. Okay, more importantly, what were the offers doing? The offers were reloading, and the minute someone stopped buying the offer, they went to market. Okay, and the last thing, you all said how quickly it went. Okay, as quickly as it went up 10, 15 prices, it reversed the entire thing in as quick a time as possible. Okay, so that is a raw price action, V reversal, or it can be the other way around. Okay, a reversal price action setup. Now, when you see these V reversal type setups, okay, if you miss the V, that's fine. Okay, there's nothing wrong with not trading that. It's not an easy trade to execute. Okay, yes, it can be rewarding, but it can go wrong a lot of the time. Okay, but if you see that kind of price action, okay, it's going to look something like this on a 1 minute. Okay, what it'll tend to do is it'll always tend to do a little bit of a lower flag type formation, and there's a very simple reason why. Okay, you've got second-hand buyers that'll step in to buy this. Okay, you've also got people that are short that'll take some profits, and that's why you'll get this two-way trade. Okay, it almost gives you a chance to think about this. What's going on? What's going on? What's going on? And then ultimately, once it takes out that bounce point, it will continue to drift lower. Okay, V reversals tend to be tops of the day or bottoms of the day. Okay, so you'll tend to get continuation in the direction. All right, so just by knowing this price action setup called a V reversal, okay, you can ideally get 2 trades out of it. More importantly, you can know what not to do when you see this kind of price action. Do you see how just knowing something as simple as that, or that kind of a price action, can give you consistency? Okay. Any questions about that? Good. Okay. I've got another example for you. Again, same setup. I'm going to show it to you very quickly. Otherwise, Mike Balfour's going to get upset with me. Okay. Put straight line auction.
I think you've got one good reason.
Good one, Marcus. Okay, let's find this quickly. Okay. As you can see here, you'll see when I made the 66s, that was the high. Okay, so let's watch that carefully. Okay. Lights, please. Okay, so again, it all looked wonderful and glamorous in the previous one. I instantly went on sides, okay? But sometimes you can get in too early, okay? And that's the mistake a lot of traders make. Is in this situation, the first one, what I've done is I've entered on price action. Okay. The second one I've entered based on levels that I thought were where the price action would come. So 52s, 51s was where I thought it was. That's why I've pretty much gone down there. Now watch the reaction here. Okay, so aggressive again, aggressive into the high. Okay, nice and aggressive, feels very punchy. Should I be in yet? Well, no, I haven't had the climatic move yet. Big 1,000 knot. Look at the panic, panic, panic. Quick, let me out, let me out. Okay. Again now, when it trades these 66s, watch how it responds off the high. Okay, bang, look at that offer. First bit of selling comes in there. Someone taking 2,000 at 63 and offer to market, bang. Okay, now he's taking the 2s, he's taking the 2s, taking the 2s, bang, offer 1s. Okay, still taking 2 and 3. Okay, you can see a seller is in the market. Someone is taking the offer here. Okay, again, 4,400 contracts trade. Okay, bang. Again, what happens? Blips up, instantly hit down to market. Okay, so we know our seller's there. Okay, now let's just watch how he responds.
You long or short?
Short. Okay, don't worry too much about the position. I want you to watch the price action. Okay, I want you to see what it looks like. Okay, so look how heavy that offer's gone, and offer to market. Okay, so someone's buying the 4s and he's taking them. Okay, let's watch that absorption and hit market, yeah? Okay, and hit market. Okay, so he's offering, he's holding the offer, he's taking the offer and hitting to market. Okay, again hits another offer. Bang, very aggressive. Also look at the size of the offers, nice and big, 500-600 lots. Okay, you know they're real. Okay, someone buys 300 and what happens at 61s? Okay, first time we've got a 2-tick rotation. Bang, takes the 2s, hits the 1s. Okay, whilst the equities are collapsing. I remember those prices in the S&P. Okay, probably not the best example. Keep coming. Okay, but you get the idea, guys. You get the idea of how the offer holds. The offer gets absorbed. The minute someone stops buying it from him, he goes to market. Okay, and you're going to see this slowly drift all the way back down to 53s, 52s. Okay, again, look at the volume traded at 1s, 2s and 3s. Okay, someone buys that, big clip, 400 lots goes through at 62. What did the price do? Instantly hit to market. Someone instantly sold. Okay, so now he's taken the price lower. Absorbing the offers and selling to market. Absorbing the offer, selling to market. Okay, good. Lights on, please. Okay, any questions about that? Okay, that's a V reversal, guys. What I want you to do for your homework, when you see on a 1 minute chart, okay, the price action will look a little bit like what I've just showed you, but when you see how to identify it on a chart is you're going to see something like that on a 1 minute chart. Okay, so when you see those kind of reversals, have a look and see what does it do after that. Okay, how can I make money based on that price action? Okay, good. The next one. Okay, I'm going to show you today's gap fills. Okay, how do gap fills work? Okay, it's very simple. If the gap, or you always want to be buying a gap fill, always, guys. As a rule of thumb, buy a gap fill. No excuses, just buy the fill of the gap. Okay, nice tight stop, depending on the market. If you trade in the S&P, maybe a handle. If you trade in the stocks, maybe 3 ticks. Okay, but there's no excuse for not buying a gap fill. Okay, the important thing is the response at the gap fill. Okay, how does the market respond? What would you want to see? Okay, there's 2 types of price action you see. You can see a bid over price action, okay, which ding 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 we spoke about yesterday, or you can see an absorption type price action. Okay, both of them have got very different outcomes. A bid over type price action, okay, you're going to get a very, very aggressive response. Okay, you're going to get a very quick bounce and you're going to get paid very quickly. Okay, what you tend to see with a bid over type price action on a gap fill is that you need to front run it. Okay, you have to be front running the market, otherwise you're not going to get filled. Okay, the reason it happens in a bid over fashion is because everyone panics to get in. No one gets filled at the gap, so everyone goes to market very aggressively. Okay, the other one is absorption, but like what we saw in the S&P today. Okay, a lot of absorption around the gap fill, and then eventually it goes bid. Okay. Let's have a look. Lights, please. Okay. Okay, so let's watch this from the beginning. Makes big for you. Okay, this is a bit of an absorption type gap fill. Okay, the gap is 70s. Okay, so note the front run. I've tried to front run it. I think I've already scaled out. Okay, but watch the reaction here now. Watch how long it gives you to have a go. Okay, so the gap was, sorry, this is actually the, let's go back, sorry. Okay, this isn't the absorption one, this is the direct bid. Okay, so the gap was at 70s, it never traded 70s. Okay, now watch how quickly it goes bid, and watch the bid over. Okay, and you'll see what I mean by bid over. Absorbs the halves, takes the quarters. Absorbs the ones, takes the quarters. Okay, absorbs the quarters, takes the ones. Okay, bid gets pulled, but again, straight back on the bid and straight to market. Okay, watch how the market goes bid over. Takes as much as you can on the bid and then goes to market. Okay, so very important. Look at the speed of reward there. I mean, bang there. You've taken 3.5 handles out of the market in a space of 10-15 seconds. Okay, that's what you call a bid over type price action. Okay, so how do we trade that? Well, bid over price action, you need to make sure that you front run. Okay, so lights on, please. When you see a gap, okay, make sure you're front running that gap. If the gap does not get filled, expect to see bid over price action, very aggressive. Everyone jumping to market to get filled. Okay. If the gap does, however, get filled, that's when you want to be a little bit more cautious. That's when you want to just see, is there a bit of absorption? How does it play out? Okay. Those are the ones you kind of want to almost take that small little 3-4 tick winner. Okay. I'm going to show you an example of absorption one now. Okay. Again, exact same market. Okay. Oh, this is today. Okay. maybe let's go back. Okay, so what's happened today? The gap is at 10 3/4. Okay, that's where the gap is. Okay, so again, I'm looking to front run this. I'm not looking to do anything special here. Watch how it comes down. Okay, so 11.5's trade. What does the market do? Okay, it's very important to watch that. What did it do there? Okay.
Stopped in front of
Okay, so it gets all the way down to 11.5s. We told you the gap is 10 3/4. So it's a very big front run. How quickly did it go from 11.5s to 13.25?
very quick.
Okay, so again, guys, make sure you're front running these things. I didn't expect it to get front run by 3 ticks. Okay, but make sure you are front running them because everyone's looking to get involved at the same time. Okay, let's keep watching. Okay, very important. Goes off it again. Okay, so there's your first little clue. You get a very aggressive move off the front run. Okay, but then instantly goes off it. Remember the first one, we got a straight line bid, never ever went off it again. Okay, straight back to 11.5s now. Notice the difference. Okay, so the first one, we came straight into the gap. Okay, then went bid in a straight line, 3.5 handles. Okay, now watch the second one. Okay, so you get filled on a front run. Again, nice and aggressive, but what happens? What happens to the bid? Okay, look at those. Oh, look at the person selling into the actual market. You got someone buying it, and then it just gets hit straight back down. So there is someone buying it there. You can see there's aggressive buyers, but equally someone's aggressively selling the market. Okay, notice the difference between the two. The one, there was no seller, nothing on the offer, no one taking the other side of the market. This one, suddenly, okay, you got buyers and you got someone selling the market. Okay, so suddenly the gap is filled at 10 3/4 now. Okay, and how does the market respond? Okay, very differently. Okay, you'll see eventually, yes, this does go bid. Eventually, after about 10-15 minutes of absorption in the lower bound, it does go bid eventually. Okay, but note the difference, guys. Very, very different types of price action. Okay, so lights on. Okay, so your goal as traders, guys, from yesterday, like I said, your goal as traders is to go and identify your principles, your concepts, your trade ideas. Know what they are, whether they're breaking of highs and lows, trend lines, VPOCs, doesn't matter what it is. Okay, but then go and identify what kind of price action can you trade in those areas. Okay, that is where the meat and juice is, guys. That is what's ultimately going to define your setup as being successful or not. Okay, any questions? Okay, what I will do for you is over the course of a couple of days, I've got a lot of these price action setups in videos. Okay, some of them a bit older. I'll bring them for you and I'll show them to you. Okay, I'll try and point them out for you, but the important thing is you have to start your own library. Okay, because the way I visualize, the way I talk through a V reversal or an absorption or a gap fill is very different to how you will talk through it. But the important thing is you need to be watching these videos every single day. Okay, Z, when you see that iceberg, you need to be watching that today and tomorrow and the day after, looking for that price action. Okay, you do that every single day and I guarantee you will become an absolute master of price action. You'll make money in this job. Okay, good. Let's go through the ECB. Any questions about that? Okay, ECB. Very briefly. Okay. Step 1. What is the ECB's stance? Okay, so we need to look at the ECB in general. We know the ECB is on wait mode. Okay, they've said they want to see the impact of the TLTROs and the covered ABS and covered bond purchase. Okay, we know that the TLTRO is on deck 11. We know that that's what the ECB are waiting for. They want to see how is this going to impact the market. Okay, so we have the main member, Draghi. What's his stance? Okay, okay, we know Draghi is quite dovish. Okay, we also know he's a bit of an authoritarian at the moment. Okay, he's got a lot of people backed up against him at the moment. Okay, what else do we know about Draghi? What's his general stance? What's his one-liner at the moment? Okay, so we have all the necessary unconventional tools to do if we need to. Okay, he said we'll do more. We'll do QE if need be. Okay, he's spoken very much about the 5-year inflation expectations. Okay, mentioned the Jackson Hole. Okay, so that's what the ECB stance is all about at the moment. That's your step 1. Okay, step 2 is the market's expectations. Okay, what's the market expecting out of tomorrow? Okay, based on the current pricing, the market isn't really expecting much. They're not expecting any kind of cuts. Okay, they're not expecting any kind of further stimulus. Okay, altogether they're expecting Draghi to maintain a dovish stance. Okay, to maintain the dovish rhetoric. Okay, so if he comes out and were to suddenly say, well, you know what, actually, when I said we were going to increase the balance sheet by 3 trillion, yeah, that was just a ballpark figure. It might not be that much. Okay, how's that perceived based on what's expected? Okay, something like that will move the markets. Whereas if he comes out tomorrow and says, we'll do whatever it takes, and if that means, you know, QE, then so be it. Okay, so you go and you work out what are the dovish, the hawkish, and the neutral things Draghi can do. Same as the FOMC. Okay, so we've just said if he mentions 3 trillion, what about if he mentions covered bond purchases? Corporate bond purchases. Okay, the market spoke about that a few weeks ago. What happens if he comes out and says, actually, we are looking to do corporate bond purchases? Okay, how's the market going to respond? Dovish, hawkish, neutral. Okay, and you go through the possibilities. What can Draghi do? What in the statement could he word differently? Okay, if he changes his inflation, you know, that they're no longer firmly anchored, how's the market going to respond? Okay, good. Any questions about step 2? Good. Step 3. Darren, what's step 3? Okay, not quite. Data. Okay, so what was the data out this month? The PMI, the ZOO, the CPI. Okay, all the important data to the ECB. Okay, we know inflation ticked up on the headline, but ticked down on the core. We know the PMIs have generally been a little bit better. The ZOO's been a little bit worse. Okay, the inflation expectations, the 5-year inflation expectations have ticked down again from last month. Okay, so we go and look at these data pieces. We make a note of them because that's what the ECB is doing. They're making a note of what the data is doing. Okay, step 4, Darren. What's step 4? Come on, you hit the nail on the head there. Good. Okay, so before your trade plan, your market structures. You'll get it right next one. Okay? So you go through your markets. You start with your most obvious markets. Remember I said to you last time, why do you want to look at the equities when it's an interest rate policy decision? Okay, start with the obvious ones. Okay, the FX Euro, very obvious. Okay, you've seen it's come from 140 to 120, 425 in a straight line. So it's an obvious market to look at. Okay, then look at the bonds, particularly the front end of the bond markets. Okay, how are they responding? How are they set up structurally? Okay, if the market's been doing that for the last 5 weeks, okay, or it's been doing that for the last 5 weeks, what do you want to trade? Where's the opportunity for you to make money? Okay, remember, as traders, we're fortunate in the sense that we can trade across the markets. Okay, I'd far rather trade a market that's doing that than a market that's going nowhere. Okay, simply because I know I'm going to get a little bit more bang for my buck. Okay, so that's the market structures. Then we have the Darren. No, come on, Darren. Good. Okay, so then we go to our trade plan. Okay, so very important, guys. How are we going to enter? What are we going to trade? Okay, if Draghi comes out tomorrow and says, you know what, we can do corporate bond buying, okay, that's new to the market. It's hawkish. How are you going to respond? Are you going to hit market or are you going to wait for a fill? What size are you going to use? What stop are you going to use? Okay, how far do you expect the market to go? These are the kind of things you'll sort out in your trade plan. No ifs and buts or maybes, just exactness. Okay, good. And then last but not least, we've got our, okay, just your money management plan. Okay, so your money management, how are you going to manage your trade setups over the ECB? Okay, how much are you going to risk on each trade? A lot of people stop short here. They just assume that they'll manage it in their head. Okay, are you willing to risk and lose half your day on one idea? Okay, that's the kind of things you think of in terms of your money management. Okay, any questions about ECB? Okay, yes, altogether tomorrow could be hell of a boring, but equally don't forget Bank of Japan was meant to be hell of a boring last week. Okay, and they came out and did quantitative easing. Okay, don't also forget we had that big little article that came out that there's a little bit of infight, dissent between the ECB members. Okay, he will get questioned on that tomorrow, guaranteed. Okay, so how's he going to respond? Maybe the ECB sat there today and went and said, listen, let's just do QE. Okay, maybe tomorrow is the biggest ever day for everyone sitting in this office. Okay, what has the Bund done the last couple of days? Okay, everyone's pulling out their hair. No one's expecting anything. Half the guys are going to sit there fast asleep tomorrow. Okay, so the markets are tricky, but sometimes you just get that little bit of a gift. Okay, markets do gift you. How many of you play golf? Except for you, I know you play golf. Okay, every golfer will tell you this. Okay, and this is what I'm going to leave you with. Every now and again, at some point on a golf course, you could have the most horrible day of your life. But at some point in that round, you're going to hit one absolutely incredible shot. Okay, and that's what brings you back. That's why you keep playing golf. Trading is exactly the same. Okay, it's been tough for bond traders. Really, really tough. Okay, it's been a tough year in general for traders. But that one little trade, okay, is what will make your year. It's what will bring you back next year. Okay. Take it easy tomorrow morning. We haven't got much out early in the morning. Okay, we've obviously got Bank of England at 12, but the main event is at 1:30. The volatility, the volume, the risk is going to be taken around 1:30. Okay, manage your day around that. Good. Are there any questions? Okay, please work on those price action setups. If you haven't got the recording software, get it. Okay, make sure you've got the recording software and start recording your price action. Okay, have a good evening.
Cheers.